People often tell me I'm too young to be building a dividend portfolio, that I should be taking on more risk, chasing growth stocks. But after investing for almost 3 years, a lot has actually happened. I've learned what kind of an investor I really am, and that's why I'm not putting off my retirement plan any longer. My goal is simple: to build a $2,000 per month passive dividend income stream. And in today's video, I'll share with you the exact steps I'm taking to get there. Without further ado, let's dive straight into today's video. Let's go. Now, before you jump into the comments, I know that $2,000 a month isn't enough to retire on. This dividend portfolio is just one piece of my overall retirement plan. On top of that, I've still got my S&P 500 investments, which I've automated to keep buying every month for the next 20 years, plus my CPF account that I'm actively contributing to. Like I've always said, investing is never guaranteed. That's why I'm not relying on just one strategy to secure my future. This is simply one part of the bigger picture. So the question is, how do we get to $2,000 a month or $24,000 a year? Of course, what you see will be just a projection, an estimated yield based on my current dividend portfolio, which I'm still building up. Right now, the average yield of my portfolio sits at 5.63%. That means to generate $24,000 a year, my portfolio size needs to be around $426,000. Let's just round that up to $430,000 to keep it simple. And based on this calculation, I'm already 30% of my way there. I'm short of $293,806.91. I'm going to be as transparent as I've always been. What you see now in this table are all the stocks that I'm holding, the average cost, and the dividends per unit based on 2024's numbers. So I guess the question is, how did I start and how can you start as well? With my S&P 500 ETF investments, it's already as hands-off as it gets. I'm basically investing in 500 of the top companies in the US. So for this dividend portfolio, I didn't mind spending a little bit more time DIYing. But if you're someone who prefers a hands-off approach, then I'd say take a look at the Straits Times Index ETFs here in Singapore. That's ES3 or G3B. They work very similarly to the S&P 500 ETF, but instead of 500 companies, they track the top 30 listed on the Singapore Stock Exchange with an average dividend yield of about 4%. If you're looking to pick your own ETFs, you can use ETF screeners to filter based on the indicators that actually matter to you. Whether that is steady returns, higher dividends, or other investing goals, the screener will then show you the ETFs that fit into your criteria. You can also sort by trading volume to actually see what ETFs are currently popular amongst other investors. I've recently made a video walking you through a step-by-step guide on how to find the right ETFs for your goals. I'll leave that video link up above and down in the description box below. That being said, you do need to pick a platform, and if you've been following along on my channel for a while, you'll know that for my Singapore stock investments, Moomoo Singapore has been my go-to platform since early 2023, and here's why. Number one, Moomoo Singapore is a low-cost brokerage platform here with 1 in 2 Singapore users and 1.5 million people using their platform. New users get 1 year commission-free trades in the Singapore stock market and just a minimum of 99 cents platform fees. Even after the first year, it's still just another minimum 99 cents commission fees per order. Number two, they educate beginners. This was honestly life-changing for me when I first started investing back in 2023 when I was really new. Exploring their Learn section gave me bite-sized tutorials and explained things like what ETFs are, how dividend stocks in Singapore works. You can also practice investing through paper trading, helping you to build confidence before you actually start. The user interface is hands down the best UI I've used, and trust me, as a finance enthusiast, I've tried out multiple platforms. Moomoo is the app I open daily to check how the market is doing or to research on a stock. Everything I need is there. Company overviews, financials, shareholders, past dividend yields, and whether they're trending up or down. For example, when I first looked at Capital Land Integrated Commercial Trust, I could instantly see its dividend history and property performance. And if I wanted more perspectives, I could also check out the news or community comments right in the app. There is also a dividend calendar where it lets you monitor upcoming payout dates and even subscribe for alerts so you know exactly when the next dividend payout is coming. A side tip, if you do invest in US stocks that eventually pays out a dividend, with the Stock Yield Enhancement Program, you're able to earn interest on the US stocks owned. And if you're looking to reinvest the dividends received from those stocks, participate in the dividend reinvestment plan and you'll automatically reinvest the dividends back into the underlying stock. New users to Moomoo Singapore, using my exclusive link down in the description box below, you can get up to $1,120 worth of sign-up rewards. Depending on how much you deposit, you'll receive Nvidia shares and trading cash coupons. And not to worry, if you've signed up before but have not made your first deposit, just use my code over here and you'll be eligible for this sign-up rewards as well. I'll leave more details down in the description box below. But overall, I invest in what makes sense to me. If you take a look at my dividend portfolio, they are mostly in banks, retail, hospitality, and healthcare REITs. Take retail REITs for example. Fraser Centrepoint Trust owns malls like Next, North Point, and Waterway Point, and every time I visit these malls, they're packed. That gives me the confidence in the kind of tenants and rental income that these REITs can generate. Of course, I don't stop at just visiting those malls. I also look at what the dividend yield was. Has it been stable or is it increasing? Property yield, how much income can the REIT generate from its assets and whether it's sustainable. If you want a resource link, I'll leave it down in the description box below for you to dive deeper into REITs analysis. One big lesson I've learned in my time of investing, one super important thing when picking a platform is to make sure it allows you to participate in rights issues. I learned this the hard way. I held my Fraser Centrepoint Trust units on another platform, and when they announced a rights issue recently at $2.05 per unit, I couldn't participate. Major regret, but I've since liquidated and bought back on Moomoo's platform at $2.19. A common misconception, you don't need a huge capital to start. I started investing into the Singapore stock market when I was still at my full-time job, taking home a salary of $3,000. You see these 200 units of CapitaLand Ascenders that I'm still holding. I bought this in 2023 and have not touched it since. Buying 100 units of Fraser Centrepoint Trust is just $200 over. Dividend investing is not just for high income earners or for people who have a huge amount of capital. I am gradually building this portfolio over time. I invested during high interest rates environments and I'm excited to see how REITs and banks will perform if and when the US Fed reduces interest rates later this year, but I'm going to continue accumulating whenever an opportunity comes my way. If you've been following along on the channel, you would know that in this video last year, I shared that I was using the dividends collected in 2023 and 2024 to reinvest them into 2 US stocks through the regular savings plan available on Moomoo Singapore's platform. And right now, they are both up 23% and 13% respectively. At this stage of my life, I don't need the dividends to pay for my expenses, which means I can put every dollar back to work. And honestly, that's how you really speed up the journey. Reinvest, let your money compound while you're sleeping. So that's where I'm at with my dividend portfolio, about 30% of the way to hitting that $2,000 per month in passive income. It's not just a straight path and things will definitely change along the way. But what matters is starting early, staying consistent and adapting as we go along. And if you're looking to start your own journey, consider a low-cost brokerage platform like Moomoo Singapore. They're currently offering that $1,120 in new user sign-up gifts. I'll leave the link down in the description box below. Remember that this dividend portfolio is just one piece of my bigger retirement plan. I've got my S&P 500 investments, CPF, and other strategies working together. There's no one-size-fits-all when it comes to investing, so the key thing is to figure out what makes sense for you. If you found this video useful, let me know down in the comment section below or hit the like button. And if you want to connect a little deeper with me, you can join my Telegram community. I'll leave the QR code over here. I'll see you guys in my next video. As usual, have a great week ahead. Bye-bye.